Do you receive rental income? If so, you'll probably need to file an income tax return and pay tax on any profit you make. Most landlords who have signed rental contracts with long-term tenants are doing the right thing. But did you know rent from a temporary or short-term arrangement can be taxable too? Almost all rental income is taxable, including income you receive from renting out a residential property, your own home, a room in your home to boarders or flatmates, or a sleep-out or caravan, whether long-term or short-term, and whether you have a formal agreement in place or not. Everything you need to know is on Inland Revenue's residential property webpage. You won't need to pay tax on income from private boarders if the rent is equal to or below a certain amount, called the weekly standard cost. You won't need to file an income tax return if this is your only income. If your income is taxable, you'll need to keep a record of all your income and expenses so you can calculate your profit at the end of the tax year. That's the 31st of March for most people. Examples of deductible expenses might be property insurance, rates, or repairs and maintenance. Many people ask a tax agent to help with the paperwork. You can even claim your accounting fees as an expense. If you're renting out a room, you can only claim a proportion of your household expenses. Once you've worked out your profit, file your income tax return with Inland Revenue by the due date. This is normally the 7th of July. Our taxes help pay for essential public services like hospitals and important social services, including the Canterbury Rebuild. Please check our webpage to make sure you're paying your fair share.